I met with a family today who is just starting out and they're going to be doing mortgage free life. And I was really excited about their projected payoff. So I wanted to show you how things look for them. Another thing I just wanted to mention is that mortgage free life is for the financial elite. And when I say elite, I don't mean people who make a lot of money. I mean people who are disciplined and they are savers. There's probably 20 to 25% of the population that can actually qualify for this strategy and do it successfully. And so I wanted to show you how this can look for a family. So to start, this family is buying a home that is $250,000. They're putting $50,000 down, so they are going to be financing $200,000. Today's interest rate is 6.6%. And we are looking at a 30-year mortgage versus using the mortgage-free life strategy. So their mortgage payment would be $1,986 and 84 cents. This family has a net monthly income of $6,000 and their expenses are $4,000. So that's what I mean by a family that is in the financial elite because they are savers. So they're only spending $4,000 of the $6,000 they bring home. So here's what's so cool. So if this family were to stay in a 30-year mortgage, they would pay a total of $319,333 over the life of that loan. Using the mortgage-free life strategy, they would be looking at paying about $133,000 in interest. Now, the payoff time using mortgage-free life would be 11 years, so they would save almost 19 years. They would save about $186,565 in interest. Something I didn't show you initially was that they also have a vehicle loan and they had some student loans that they're going to include in this strategy for payoff, and they're going to save an additional $59,500 in interest by paying those loans off. So here's the part I like to walk you through so you see how this works. So we're going to jump here to October 2027. I want to show you here how, if you notice, their expenses changed. They decreased a good bit. And that's because right here, we paid off that vehicle loan. So that took out a monthly payment and decreased expenses. That's how this strategy can help you get out of debt so quickly. Now we're jumping to December 2029. And what I want to show you here is that we had another decrease in expenses. And what we did was we paid off some student loans that they had outstanding. So you'll see how the expenses the month prior were about $3,000 or $2,970, and they went down to about $2,600 a month just by getting rid of that payment. So now we're looking here at the end of their payoff. So we're looking at September and October 2036. So the beginning balance on the loan at that point is pretty low. It's only $6,000. Their income of $6,000 goes in. They pay their expenses for the month of about $2,600. Their interest payment at this point is $40.32. Their ending balance for the month, and then this is the available balance. This is if anything were to happen, they have this money available to them. And the final payment here in October 2036, and they're done. So should this family stay in a 30-year mortgage, or should they use the mortgage-free life strategy to pay their home off?